I'm of the opinion that some of the bigger stocks that have made their bigger moves will have very slow sideways grinds higher. I don't see any super great opportunities for myself in some of the big leaders, I guess, right now. I think we have great opportunity in some of the smaller stocks that provide things that we actually need on a day-to-day basis. Energy stocks, material stocks, retail, cyclical stocks. I think some of those boring ones are going to be the sneakers that people don't notice in the background, that just steadily go higher and give us long-term runs from here.
Well, obviously we've kind of looked at main kind of factors across AI and things like that. Now we see the stock market and it's continually going towards the upside as far as I'm looking at right now. Now, do you remain kind of overall bullish on the stock market going forward? What kind of macroeconomic factors do you think will be able to support that growth going forward? Or do you think at some point we are due to have a significant pullback?
What do you think, Jared?
It's always a good question, but I think that every bear market, which we had in plentitude in 2022, is followed up with years of talking heads and this is our bear market rally. Things go lower from here, and the more I hear that, the more confidence it gives me that we have potentially a pretty long-term bullish market in front of us. I think there's a good opportunity in the stock market. I think, I'm of the opinion that some of the bigger stocks that have made their bigger moves will have very slow sideways grinds higher. I don't see any super great opportunities for myself in some of the big leaders, I guess, right now. I think we have great opportunity in some of the smaller stocks that provide things that we actually need on a day-to-day basis. Energy stocks, material stocks, retail, cyclical stocks. I think some of those boring ones are going to be the sneakers that people don't notice in the background, that just steadily go higher and give us long-term runs from here. So I'm very much not bearish on the market as a whole. I think there's some upside potential for sure, but I think it's also going to be a bit of a disjointed market, right? The S&P doesn't have to go higher, and it may not. It may just grind sideways and slowly higher. But I think there's going to be sectors within the stock market that have really good major runs, and that's kind of where my energy is focused. I think a lot of those real boring stocks, some of those material, those guys that make steel, right? That we don't think we need, except for it's in everything that we consume and use on a daily basis. Copper, I think those are going to be the ones that kind of take off and run, that nobody's paying any attention to.
It's true. And just to that point, I mean, if we have something as simple as sector rotation, I mean, right now, energy, utilities are the worst performing sectors year to date. So call it a reversion to the mean, call it a pullback in tech, but an advance in something else to catch up. I mean, energy, utilities, materials, that'd be the catch up play for value. And I know we're positioned for that. So, I mean, I think we have some fantastic price cycles ahead. And, it'd be interesting to see if it's just a broad market. As Jared said, maybe the SPY is a slow grind. Maybe the big tech is a slow grind. But as a broad market, maybe it still goes higher. And so I'm not surprised that, we're sitting here talking tonight and tomorrow is the Fed in the afternoon. They're going to raise rates. And then we have probably a 6 to 8 month pause until maybe March of 2024. The market has been so desperately waiting for the pause cycle that you can see that it clearly priced it in way ahead of time. And that's what the market ultimately ends up being, is it's a forward-thinking mechanism. So call it the Fed pause, call it the AI hype, call it whatever else. It's like, I think there's going to be enough excuses or catalysts in the market to have a commentary that will continue to drive it higher. And like we talked about earlier, I don't know if we said this in this session or not, but the most painful trade this year has been people that have been fleeing to safety and didn't want to invest in the market in 2023 because they thought it was going to be a permanent bear market. But instead, now they're looking at stocks that are up, hundreds of percent year to date, and ETFs that are up 40% and 20% respectively and making new highs, and within a whisper of those all-time highs. And I mean, I don't want to short it at the all-time highs. I think if anything, we have a disruption and we have a volatility dip. I'm excited to buy the dip. I think right now that big breakout in the SPY above 420 is how we get to 500. So I mean, that's still 50 bucks higher. So 50 bucks a share is pretty good. That's a pretty good movement percentage wise, and we can do a lot with that.
Yeah, that's very good advice. I think a lot of people, when a lot of people are fearful, this is the Warren Buffett saying, when people are fearful, what is it?
Be greedy.
Probably you guys probably know.
Yeah,
be greedy when
people
people are fearful, and be fearful when people are greedy. I think that's a very important point, because there has definitely been a lot of fear, particularly early on. Well, at least in the crypto market, I think as well, because of the macroeconomic environment. There's a lot of fear in general going on right now.
Mm-hmm.
But the guys who kind of went against the tide, how I think a lot of it is about kind of swimming against the tide and looking at what the masses are thinking, and then almost just doing the opposite. How much weight do you think that holds?